guys, how are you? Today I am going to do a past question paper question in partnerships account, right? That is admitting a partner, right? This is a GC advanced level uh, 2020 year 2020 question. So shall we move into the question, please? Yeah. First of all, you had to once you come to this paper, you have to see the what is the requirement, right? Required income statement of the partnership for the year ending 31st 2020, including appropriation made to the partners, and capital accounts and current accounts for the partners for the year ending 31st 2020, right? So the trial balance of the partnership as at 31st 2020 is as follows. And they says before that they says Nitu and Madhu are carrying out partnership under the following conditions. Nitu and Madhu share profits in respect of 2 is to 1. 2 is to 1 is the profit sharing ratio, right? Respectively, each partner is entitled to a monthly salary of 50,000. Salary, we make adjustment salary, 50,000 in the sense 600,000, 600,000, right? Salary, right? 600,000, right? Profit and loss appropriation debit and credit to the current account, right? And thereafter they says each partner is entitled to an annual interest of 10% on the opening capital balance of the year. Opening capital balance is 2000, and that is 10% interest on capital, on capital, right? Interest on capital, right? How much? 10% on 2,200,000, right? 1,100,000, right? 200,000 and 100,000, that is the interest portion. The goodwill of the business is adjusted through the partners capital account. All other transactions with the partners except the goodwill adjustment are recorded through their current accounts. They have given the trial balance as at trial balance of the partnership as at 31st 3rd 2020, right? Capital accounts, Neetu and Madhu 2000 and 1000. All the balances I have taken. Current accounts, Neetu and Madhu 400 and 200. 5% loan I have taken here, that is 800 for Ritu. Property, plant and equipment 4100. Sales 6000. Cost of sales 1850. Operating expenses 2600. Inventory as at 31st 3rd 2020 700, right? Investment 700. And uh, sorry, inventory 700, and loan repayment Ritu 420 in the loan account I have recorded here, 420. And drawings Nitu 500, and cash brought by Ganga account I have opened and 3 million. And here this is in additional information. Inventory as at 31st 20 was measured based on the physical count. Okay. The goods drawn by the Neetu Madhu during the year were 60,000 and 40,000 respectively. These have not been accounted in the books, right? Drawings again. Goods, right? Goods. Neetu and Madhu 60 and 40. 60 and 40. Drawings. Nidhu and Madhu 100. We have to deduct this one. Then we will show 1,750,000, right? 1,750,000, right? So the third adjustment is Ritu's loan repayment account balance. Here the loan drawings means cost of sales debited and sorry, cost of sales credited and current account is debited, right? So Ritu's loan repayment account balance in the trial balance consists of the loan interest paid till 30th 9th 2019. That means October, November, December, January, February, March. 6 months they have paid and 6 months we have to calculate. And the cash paid to settle 50% of the loan on this date. 50% of the loan they have settled. Then 400 balance would have been this carried down will be 400 out of 800, right? So carried brought forward will be the 400 for the next year. So and then difference would be 20, right? 20 has to be charged to the interest account, right? Interest account. We have to open a interest account. Interest and interest payable. Interest payable, right? Interest on loan loan interest rest payable on loan, right? So payable account, I am going to transfer this to the payable account, right? Loan account, loan interest payable account 20, right? Here it is credited and debited to the interest payable, right? I have removed this 20 payable transfer to the payable interest payable account. So 6 months for 1 year. What is the interest rate for 400 800 million 800,000? That is 440. 40 is the interest you charge to the interest account 40 interest payable at 40, right? Then balance payable is 40, carried down balance is 20, 40 40 and brought forward payable, because interest charge for the year for 800,000 loan is 40, 5% is 40, 40 interest account debit, interest payable account 40 credit, and already they have paid interest 20 interest paid with the repayment of loan. 20 portion is there that I have transferred to interest payable account from the loan account, right? So balance will be the 20 is the balance 40 and if you deduct the 20 then carried value will be 20. So you have to pay low interest payable interest payable, right? Ritu, that is 20, right? Loan is 400, loan 400, interest 20 payable, that transfer to balance sheet. This one interest taken PNL 40 interest, right? Loan interest, loan interest 40, right? The interest payable in the remaining loan balance has not been yet accounted for. So Next adjustment, Nidhu has paid 10,000 out of his personal money to renew the trading license of the partnership for the year. This has not been accounted for. Nidhu has paid for the trading renewal of renewal of trading license. Trading license. Okay, that is how much? 10,000. 10,000. Renewal of current account. Renewal of trading license. Right? How much? Neetu 10. Because Neetu has paid the partnership renewal account. Neetu has paid the partnership trading license account from out of his pocket. So we have to pay him, right? So credited to the current account and debited to the PNL because it has not been accounted for. PNL debit and credited to the current account. So the partnership has paid 140,000 for the insurance premium of vehicle for the year ending 31st 3rd 2020, and it is recorded in the operating expenses of the business. However, it was revealed later that this payment includes an insurance premium of 40,000 paid for the personal vehicle of Madhu. Personal vehicle of Madhu. Then we have to charge personal vehicle of Madhu 40. And we had to remove 40 from operating expenses. Right? That is 2,600 minus 40. Minus. Right? Minus 40. Then 2,560. Right? Then here we will say insurance vehicle insurance. Okay, 40. Because the company has paid, we have removed that. It is included in the operating expenses. Means operating expenses they have said 2,600. So we have removed that from operating expenses 40, and then operating expenses will be 2,560, and we have charged to the current account of the M, right? Madhu's current account we have charged with 40 vehicle insurance because the partnership has paid the personal vehicle of Madhu, right? So we have to recover that money from Madhu. That's what we have passed that entry. Ganga was admitted as a new partner on 31st 2020. Ganga brought 3 million on this side on this date to the business as her contribution to capital and goodwill. She brought it 3 million, right? The new profit and loss sharing ratio among them is 5:3:2 respectively. On this date, the goodwill of the business was estimated as 1,500,000. So we had to remove the 1,500,000 from Ganga's account, goodwill account. Goodwill account credited 1,500,000 said Ganga. Ganga. Ganga brought the goodwill of 1,500,000. Then the earlier partners will share this goodwill according to their profit sharing ratio. That means capital account of Nitu and Madhu. Nitu is 1 million and Madhu is 500,000. Then 1,500, right? This is 1,500 balanced. So capital account goodwill 1,500,000, right? 1,500,000, right? So here all the balances, all the accounts had been balanced. No, the here balance is 1,500,000. Balance 1,500,000 is the capital, right? This is capital. Ganga, gross account, right? Capital 1,500,000 is her capital, right? So this account also we have balanced. This accounts also we have balanced, right? So all the adjustments we have done, right? So we had to balance the accounts, right? So this is 6,000, this is 6,000, then 4,250, then here 4,250, here 4,250, 4,250. What is this charges? 2,610 means 640, 640, then 1,640 transferred to the appropriation account. 1,640 transferred to the appropriation account, right? Here interest rest on capital N and M, right? 200 and 100, right? Salaries N and M, right? 600 and 600, right? This is 1,200,000, this is 300, right? Then this is 1,640,000, right? 1,640,000. Then for the capital account, transfer to for to capital account, right? N and M, N and M, right? This is what is the difference? 140, 140 is the difference, right? 140. So 140 divided by 3, then 47 is the M, right? 47, right? Into 2 in the sense 93 is the N, right? Profit and loss appropriation, profit and loss appropriation, creation account, right? 93 and 47, 93, 93 and 47, right? Balance carried down, balance brought forward, right? This is also like that. 800, 900, 900, 1,210, right? 900, 1,210, balance brought forward. Balance carried down. 900, 820, right? 1210 means 50, 10, 50, 10, 1, 6, 650, 650. So we have to say here current account 650 and 820, that is 71,400. So right, so here capital account 1,500,000, capital account 1,500,000, 1,500,000, 1,500,000, right? 1,547,000, 1,547,000, 1,547,000, 1,547,000, 1,547,000, right? This is 3,093,000, 3,093,000, 3,093,000, right? So 3,093,000 and 1,547,000, 1,500,000, right? So say 3,093,000 plus 1,547,000 plus 1,500,000, then 6,140,000, right? This is 420. This is okay. 640 plus 1,470 plus 420, 808,030,000, right? This is 4,100,000 and this is 3,930,000, right? For 8,030,000, right? It is balanced, right? This is the accounts. Okay, so in this account they ask requirement is capital account, partnership account, profit and loss appropriation and profit and loss only they have asked, but we have prepared the balance sheet also for your better understanding and for practicing, right? So balance sheet also balancing. Here what in what areas you have to concentrate is the drawings. As usual, earlier accounts also we have seen in the past question papers, they have asked drawings account, drawings done by goods in the sense current account debited and cost of sales has to be credited, right? We have done that. And other thing is loan of Ritu's loan, 800 is the brought forward balance, and during the year 420 they have paid, and after that they are telling, so 800 minus 420, we have debited 420 here. After that they are telling 50% of the loan had been repaid, right? Balance is relevant to the interest portion. So 400 is a 50%, 800's 50% is 400. 400 should be the carried value. Carried value we have taken 400, and balance is 20,000. 20,000 we had to transfer to the interest payable. Interest payable account debit, right? We had debited interest payable account. So we have to see the what is the interest payable for the month year. 5% on 800,000 means 40,000. 40,000 we have credited to the interest payable and debited to the interest account. Interest account debit, interest payable account credit. Simple double entry. So here the difference is 20,000. 40,000 we have to pay, 20,000 already paid with the loan amount, then balance will be the 20 we have shown in the balance sheet under the current liabilities, right? Interest portion 40 transferred to the profit and loss account, interest 40, right? That is another adjustment which you have to look into, because that has so many inputs there, right? And other than that, there is no any other important adjustments are there, right? Here when you are reading yourself, if they says capital account, there is a salary 50,000, then you pass the double entry for the salary, a profit and loss appropriation account debit for the salary, and current account credit for the salary. Thereafter interest, they says interest is paid on capital opening balances, then pass it, immediately pass it. Profit and loss appropriation account debit interest on capital and credit to the current account interest on capital. So thereafter you can see what is the, if they say it is interest is involved there, then thereafter you can make the adjustments. Okay, so I hope you would have understood the explanation this and this accounts, and I hope to meet you in next session, most probably with another past question paper. Okay, more and more the questions you practices, it will be helpful for you in your examination point of view. Okay, thank you, hope to meet you in next session. Okay.